I want to show you how I caught this long trade today on gold, and the way I framed this trade is actually really basic stuff. It's just a very normal market structure that I followed, but for my entry techniques, I use maybe a little more advanced stuff like footprint charts and volume and delta and all that. But I wanted to show you how just being able to read the market to see what type of trend we're in, supply and demand zones that are really in play, how they can help you frame very high probable trades. So let's just get right into it. So in front of us, we have the 4-hour chart. And for a day trader, this is like the best chart to be, starting to frame your ideas from, because, if you look at them weekly, monthly, it doesn't matter for such short-term trades because we are not swing traders, we are day traders, right? So in this case, I was, looking at this demand zone on the 4-hour, and the reason is because, this little demand zone was the start of this move to the upside, and since then we have just been ranging, right? So after we tapped into this demand zone, we can see that we broke structure, right? And the way we can see that we broke structure is by following the trail of structure. So let's say we start from up here, and when we are trending down, we have lower lows and higher lows and lower lows and so on and so on. And to the upside, we have higher highs and lower highs and so on and so on. So in this case, I don't want to, look much further from where I need to. So let's say we are watching this move here, but that's the one, and then we broke that one, and then we had a lower high, and then we made a lower low, and there was our little, let's say, trigger that we might be looking for longs instead. And what makes this break really special is that this happened after we came into our demand zone. So in this case, maybe you ask yourself, well, why aren't you looking at this high or this low? And when you're, framing these lower highs and lower lows. And one key rule I have with me that has, maybe saved me from a lot of bad trades is that when we look at the market structure, we want to be looking at the highest point in a lower high in this case, and we want to only look at the lowest point in the lower highs, or sorry, the lower lows. So in this case, we want to see what is breaking what. So let's say we had a break there, right? And this was the lowest point. So that means that we want to be monitoring this low for the next time we break it. And that means we are looking here to see which high is going to be the one that is in play. So that means that's the high, that's the highest point in this pullback. So that's why this one is significant. And you see when we broke this low, we made a new high that broke this low, which means this is the high that we are waiting for to be broken so that we can say that we are, bullish now, for example. So let's say this happened and my eyes immediately, were drawn to what caused this break of structure to the upside. And we can see we had a really good demand zone here. So that's, a rally based rally. And this one is significant because this is the last zone we had before the break of structure. And that means that when we come back to it, whoever was buying here are going to defend their positions, right? So as soon as we came back, this was yesterday. So yesterday's price action was really not that great. I took a small trade here, didn't run, so it stopped me out at break even. So nothing happened there. And today was a bit different because this is yesterday's low, right? Right there. And this is a key level. So as soon as today market opened, we came down, we took out yesterday's low, immediately rejected it. And here's where I look at, other break of structure or change of character, and I'll tell you the difference. So here we are, looking at a pullback to our demand zone. So the same thing applies here. We look at the lower low, higher low, lower low right there, higher low, lower low, there's nothing there, so that becomes our the lowest point. And here we break this, and this is actually not called a break of structure, this is a change of character, because this is only showing us that the pullback is done and we are, or we might shift to the upside now. So that's why it becomes really important to watch the microstructure. And here's where I watch the 5 minute, for example, and let's say that's our break, right? And you can immediately see that we have a really clean trend to the upside. So we have a small bullish trend, right? So higher high, lower high, higher high, lower high, and so on and so on. And one thing that's really good with structured is that, like, if we are going to continue a trend, and this is important, if we are going to continue a trend, structure must hold. All right. So in this case, we have this significant 5 minute low, which is a part of the structure. But here's where delta and footprint and everything else comes to play. And this is why it's good to read these things so that you can know you are in the right side of the market. So as soon as we, grind it down, when we came around here, I was looking at the delta, and the delta showed me that aggressive, sellers were trying so hard to push through this low, but they failed, and there was a lot of absorption going on. And for my triggers, I will look at the 1 minute, and that's why I have really, really clean entries when it comes to my trading style. And you can check it for yourself. Just look at the delta on this candle and this candle, whatever, in whatever software you're using right now, and you'll see how the delta flips from bearish to bullish at a really good price level, actually, because we are down here. This is like literally a really good demand zone on the 1 minute, 5 minute, whatever, and it's a part of a bigger structure. So in this case, I took my long, and my initial target was this high from yesterday. This was my trade, and I don't want to be too greedy, so that's why I will call this a day. And for now, I'm just going to be watching the imbalances on the 1 hour to see if we have any shift in structure for tomorrow's trade.